Hi there YouTube, and welcome to this video where I will be explaining the process of developing a strategy for your trading bot. I will explain the steps you can take to think about a hypothesis for your strategy, write it in code for your bot and backtest it. After this process, I recommend you to always forward test this strategy using the Freqtrade dry run mode, and when you are absolutely confident that your strategy is profitable, enable it for live trading. After you have watched this video, I hope you have a general understanding on the strategy development process and you can take your first step in automatic trading with help of a bot. Please remember that this video is intended for entertainment and education purposes only. I am not pretending to be a professional, and all information you see in this video are my personal experiences and knowledge from the books I read. Now let's move ahead with my setup for this video. Again, I will make use of my trusty Linux Mint virtual environment, and as usual all configurations are on my GitHub page so you can follow along with this video. If you want more specific information about strategy building or use Freqtrade as your trading bot, please use the Freqtrade site for more information. This site is an excellent resource for building and configuring your bot, and I am not able to show all the possible options in this video. Now, to begin with the process of strategy development, I try to be as structured in my approach as possible, because if you don't have any structure in your method, you just make random guesses about your strategy and hope for the best. This is the strategy development process that I currently use. I use this to give me some sense of focus on a stage where I'm in, and I can also track the progress of multiple different strategies that I am testing. This process is quite generic, and of course you can also use this process for other bot types or online bot services as well. It's not limited to Freqtrade. First of all, I create a hypothesis of market conditions or price action. There I find out what happens with the price of an asset when certain conditions are met. For example, first I decide to use the appropriate time frame, let's say the daily time frame, and then I choose a baseline, which is my main indicator. In the example that I will use later in this video, I use the 21 simple moving average. When the price of an asset crosses up the 21 simple moving average, then it will give me my first signal to buy the asset. You can also use a second indicator as a confirmation indicator. If this indicator also gives me a signal, then I'm surely entering the market. So in the example later, I will use the RSI indicator as my confirmation indicator. For selling, I will use the same indicators but then in reverse to keep it simple. But remember that your sell indicator can also be a completely different other indicator than SMA or RSI. Also, charting tools like TradingView helps you visualize your trading strategy, and you will notice that sometimes your hypothesis of a trading strategy will not be as successful just by looking at a chart, which saves you work in the next steps of course. The second step is programming the strategy into a Python script in a strategy file with a certain layout that the bot understands. After you have programmed the strategy, it is time to backtest your hypothesis against real data. If the results are good, you can also further optimize your indicators by manually changing some indicator parameters or using the hyperoptimization function from Freqtrade. Hyperopt is out of scope of this video, and I will probably make a video on hyperopt in the future, so stay tuned for this. The next step is to do a dry run of your strategy to see if the promised performance is also realized on the current market conditions. You should dry run at least a couple of weeks to see how your strategy is working. And the final part of this video is the actual live trading with your found and tested strategy. But beware that after a certain time you should re-evaluate your strategy, because the successfulness of some strategies do not last forever. And then you have to start the whole circle again, of course. In this video I will mostly be concentrating on steps 2 and 3, which are the development and backtesting phase of a strategy. Now, Freqtrade uses these components in a strategy file to execute buying and selling under certain conditions. The time frame is the most easy part to understand, because this determines if you want quick trades within minutes or hours or maybe longer, and possibly even trades that last over a couple of days or even weeks. You can choose a time frame between 1 minute to a week or more for your strategy. And I can give you one tip from my own experience: don't be afraid to test a good strategy on multiple time frames. I sometimes tried to create a strategy on a small time frame and it was profitable, but on larger time frames it produced even better results, so keep this in mind. Now, the indicators you can use are numerous, and you can study a lifetime on these. You can see an example of some very often used indicators on this slide. Each indicator can use one or more parameters you can set to test it in your own strategy. A simple moving average only has one, and that's the amount of days you can use for calculating the average. For example, 21-day moving average, 50-day, 100-day moving averages, and so on. But it can get more complex with RSI, for example. You have RSI 14 over 14 days, RSI 7 over 7 days, and you can also use the overbought and oversold levels to adjust your strategy on. So there are at least 3 parameters to consider. And for example, the Ichimoku cloud has even more parameters, so finding the optimal setting for your strategy is a lot of work. And let's not forget the combination of different indicators. There are literally thousands and thousands of possible combinations of indicators and parameters to try and find the most optimal settings for your strategy. And I can tell you one well-known fact though, and that is that there is no perfect indicator and there's certainly no perfect strategy for markets. So don't get as frustrated as I was in the past when I often thought I found the strategy that could make me rich. And after extensive testing, it was actually quite rubbish. And this is just one example of a chart with a combination of a lot of indicators. You can see a Ichimoku cloud, moving averages, ATRs, super trends, MACD, RSI, CMO, MFI. It's hard to program all these kinds of charts and indicators in a bot, and there are actually only 2 questions you should ask yourself, and that is, when does your bot have to buy and when does it have to sell? And according to these kinds of charts, it's actually even hard for yourself to find out where you want to buy or not, or where you want to sell or not, of course. So anyway, let's move on to the next slide. My experience is that it's always better to start off simple, with one baseline indicator and see how it's performing. If necessary, use a second indicator for confirmation to stop you from overtrading when multiple signals occur on the baseline indicator, which is sometimes especially true in ranging markets. Some examples of baseline indicators are shown on this slide. You buy when price crosses above 21 SMA, or when the MACD line crosses up the signal line, and vice versa when you want to sell. And you can also use combinations of indicators that can work together, which are shown on the bottom side of this slide. The same counts for sell signals. You can use one indicator that gives you a sell signal or a combination. Also, the sell indicator does not necessarily have to be one of the buy indicators. So to give you an example, you can buy when price crosses up the 21 SMA, but you can sell with another indicator, and that is, for example, when MACD line crosses down the MACD signal line. Now, this is an example of a single indicator that gives you buy and sell signals. In this case, it's the 21 SMA, and every time the price crosses up the 21 SMA, there is a buy signal. Here, 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 over here, couple. So every time you see the price crossing up the 21 SMA, you buy. This is also an example that you first should try to see your hypothesis on a chart before you put effort in programming this into a Freqtrade strategy. Now you can see that in ranging markets, for example over here, this strategy is not very profitable. You can get buy signals, sell signals every other day, and your account gets whipsawed to a loss. To help you keeping from both overtrading, you should use a second indicator that filters in this case. And in my next example, I will use the RSI as a filter indicator. Now here you see a combination of 21 SMA and RSI 14. In this chart you can see that it's much less noisy and unnecessary trades are avoided because the RSI acts as a confirmation indicator or filter indicator. Now this seems a good strategy we can use to program into Freqtrade. You can see over here that there is a buy signal when price crosses up the 21 SMA. You can also see that RSI is crossing above the 50 line. So this is a good buy. And then you can see that in this case there is no sell and no buy because the RSI is still over 50. But here you can see that the price crosses down and also the RSI is crossing down 50. So this is an actual sell. This is more of a whipsaw, but you can see that the buy, sell, buy thingy over here is not occurring because RSI is filtering these signals. And you can see it in this section even better, that sell, buy will not occur because the RSI is still over 50. Only when price crosses down 21 SMA and RSI is crossing below the 50 line, then there will be a sell. But before I even continue with trying to program this strategy into a Freqtrade strategy file, I want to show you even more possibilities you can and maybe should think about when developing a strategy. There are also things as take profit and stop loss to consider in your strategy. The take profit point is the point where your strategy must sell your asset with a profit. The moment to take profit can be determined with three mechanisms, which are risk return, percentage profit, or the exit signal, which I've shown you on the last slide. Also, emotions can come into play if you control your bot with an API or Telegram, but I will not enter that rabbit hole in this video. Stop loss is even more important than take profit. When there is a buy signal but the market decides differently after all, it is of the essence that the bot closes the position at a point where you will say, "This is enough, I'm stepping out," and taking a relatively small loss in the process. You might sell at a loss, but you keep the rest of your money to buy when new opportunities arise and to realize profits at that moment. You should realize that there are enough traders that did not leave the market when it tanked and got wrecked. So do not let this happen to you or with your bot, and determine a good stop loss point for your strategy. Now I will let you show some examples of what I just said. In this case, the strategy has a risk-reward setup. Here you determine where you take profit or sell at a loss. That is determined by the moment you let your bot enter a position. You can see over here that the bot entered a position according to the rules, close above 21 SMA and RSI close above 50. In this case I have a risk-reward setup of 1 to 2. That means that if I entered the market with $100 and I had a losing position, I would lose the $100. But if I have entered the market with $100 and I had a winning position, that it would give me $200, so this is a profitable trade. Well, as far as I know, the Freqtrade bot does not have this mechanism programmed as a default option, but I think that if you are good enough with programming, you could program this yourself into a strategy file. Let's continue with the next. The second way you can set your stop loss is with the built-in ROI function, which is a return on investment, and with the built-in static stop loss function in Freqtrade. Both functions are based on percentages, and the ROI can even be extended with a time-based percentage. For example, you can set a strategy to sell the position at 20% profit at any moment. So if you entered the market over here, the bot would sell you at 20% gain, which is also shown in this small snippet of the strategy file. You can also set your strategy when your position has a 5% loss and therefore keep the rest of the money available for the next trade. And that's also shown here. So if the market would be against you, then your bot would sell at this level, and which is also shown by this small strategy snippet, which says stop loss at 5%. And the final take profit and stop loss mechanisms are the entry and exit indicator. After the bot has taken a position, the strategy takes profit when both indicators give a sell signal. So if you entered here in the market and the exit signal was over here, then your bot would actually sell over here. You can also say that sell signals of these indicators can be used as stop loss mechanisms, but actually this is bad practice, because you cannot really say that this is a stop loss, because your strategy can take a long while to give an exit signal, and when this happens your position can already be decimated and possibly unrecoverable. So this is not recommended for a stop loss, but nonetheless will help you exit with the trade. And you can also see in this chart the snippets where you can set the indicator settings for buying and where you can set the indicator settings for selling. Now, if you have decided that you finally discovered a good strategy that you want to develop and investigate further, then this is a time where your coding skills come into practice. Every time a buy or sell signal appears is a trigger for your bot to do its thing, and therefore this should be programmed in a script that the bot can follow and act upon it. To do this, you should at least have to know how to program in Python, and preferably have some other skills with data science tools like Pandas, NumPy and Jupyter as well. Otherwise, creating a strategy for Freqtrade will be quite a challenge. Now let's proceed and try to determine a strategy, program and backtest it so that it can help us make money while we sleep. Now let's take another careful look at this strategy. My hypothesis is that if the price closes above the 21 SMA, and RSI closes above the 50 line, then price will continue to rise and there is an opportunity to make money in trading. Here you can see that the baseline entry signal is the price that crosses above the SMA, so this should be our main signal. The RSI acts like a filter in this example, so the secondary condition should be that the RSI should be at least above 50 before our signal is actually valid. Now, my hypothesis also says that every time the price crosses below 21 SMA and RSI crosses down the 50 line, the market is bearish and the trade should be closed. The exit signal uses the same indicators in this case, but then in reverse, as you can see in this chart. Now let's write some pseudocode for this theory. On this slide you can see my theory again. There are buy signals when price closes above the 21 SMA and RSI above 50, and there are sell signals when the price closes below 21 SMA and RSI closes below 50. I will call this strategy the SMA RSI strategy. Now we get close to the part where we do some actual coding. We can create a new strategy from the template that Freqtrade gives us by using the new strategy command. You can see the command over at this slide. Now open a terminal window and go to the directory I installed Freqtrade in this case my opt directory, and activate the virtual environment for Python. And now I can use the new strategy command. Like this. And there you have it. The strategy has been created in my strategies directory. Now let's open it to see if all things are correct. And there you have it. This is a strategy file which we're going to edit for our strategy. Okay, let's exit this and close this and open this file in a other editor. There you have it. Now at this stage I'm not going through the whole file and clean all unnecessary indicators from this strategy file because it would take too much time. What I have actually done is I have prepared a strategy file before I made this video, and I'm going to actually use this instead of this Freqtrade file. So I'm going to open that from my GitHub repository, and it's over here is the RSI and SMA strategy. And what I've done is I removed all the unnecessary indicators as said, but I actually only populated this strategy file with the RSI indicator and the SMA 21 indicator, which are both over here. What I did next was I have coded the pseudocode into two rules, and those rules are the following. Buy, so this is the populate by trend function, and my first rule is to buy only when RSI is above 50 and the close price closed above the 21 SMA, and it's crossed above, so it will give me only one signal. If I did the same over here, so I made a data frame close above SMA 21, then each candle would give me a signal, and that's not the case. I don't want to have that. I only want to have a signal when it's crossing above. Well, the same goes for the exit indicators. In this case my RSI has to be below 50 before the signal goes valid, and also the close price of the candle should be crossing below the SMA 21. So, and this is actually the complete strategy in a couple of files instead of the complete strategy file, which you can see over here It's a good reference point, I should say that, but it's a little bit too much to clean this up for this demonstration. So what I will do is I will copy and paste this in this strategy file. Oh. So you can see it only contains my code. I will save it and I will be closing these, and I'm going to open the terminal window because now we can start with backtesting. Now before I forget, backtesting is only possible if you have set the trading pairs you want to backtest in the whitelist of your config file. So let's see this. And you can see over here that for this demonstration I have entered Bitcoin, Ethereum, Cardano, Ripple and Litecoin in my whitelist. You can enter a lot of trading pairs, but the more pairs you enter in this list, the more time it takes to download the data for backtesting. So keep that in mind. Also, you should change the volume pair list into static pair list, because the volume pair list option is not supported while backtesting. So let's exit this. And now we should download some data for backtesting. This can be done by using this command. cconfig.json. And also you have to add the time frame for backtesting data. So in this case I'm using a strategy with a 1-day time frame. And I also want to specify how many days of backtesting data I want to download. And for this demonstration I'll keep it at 200 days. Because otherwise it will take a long time to download all the data. Okay, let's go ahead. Now at this stage we can do the actual backtest. Use the backtest command. Backtesting, and use the config file. And specify the strategy you want to backtest. As strategy and strategy, and make this a little bit bigger so we can see the results on our screen. And wow, this goes actually quite fast. Here you can see the results of the backtest. So we actually have backtested all the coins, all the pairs, and you can see over here at the right the performance of our strategy. In this case we have Ethereum, which has 7 trades with 2 wins and 5 losses and an actual win rate of 28%, so that's still good. Bitcoin also has 4 trades, 2 wins, 2 losses with a 50% win rate. Also Litecoin, Cardano did not have any trades, and in total we had 15 trades where 5 are winners and 10 are losers, so we have a win rate of 33%. Okay, well that's quite bad, but if you see how many profit each trade made, then we see that the 15 buys had an average profit of almost 6%, and cumulative that is 86%. So if we go a little bit down, we can see from those 5 trades we actually made $86 of profit from $1,000, which gave us a profit percentage of 8%. So at this stage we can clearly see it is not the best strategy, but it made some profits. But then again, this video was actually for demonstration purposes and not for searching for a profitable strategy. Now let's continue with a recap of what we just did. We determined that every time the close price crossed above the 21 SMA and the RSI was closing above 50, then we should have a buy signal. And every time the close price closed below the 21 SMA and RSI closed below 50, then there was a sell signal. Before I programmed this pseudocode in a strategy file, I actually had to create a strategy file, which I did with this command. But for this demonstration, after I created this file, I did not use it. I used another strategy file which I created earlier for this demonstration. That file I populated with the only two indicators that were necessary for this strategy, and those were the RSI and the SMA 21. Then I used both of these indicators in my buy trend function. If one of the pairs experienced the condition that when RSI is above 50 and candle close crosses above the SMA 21, then the bot gets a signal to buy the pair, and at that moment a trade will be made and you own the asset. The same goes for the sell trend function. Again, I used both indicators to produce sell signals for the configured pairs. Here in this case the RSI should be under 50 and the candle close should be crossing below the 21 SMA to produce a sell signal and to close the position. And before you do any downloading of backtest data and backtesting, you should enter the pairs that you want to test in the config.json file, and also you should change the volume pair list in the pair list section to static pair list, because the volume pair list is not supported while backtesting. Now, before we did some actual backtesting, we first had to download the backtesting data, of course, for the configured pairs, and we did it by using this command. The time frame should be the same time frame as your strategy, and also the amount of days to backtest on should be enough to give you a good feeling on how the strategy performs. And finally, we did some backtesting with this command, Freqtrade backtesting, and we specified the config file and we specified the strategy that we wanted to backtest. Now, before we move ahead and finish this video, I want to give you a second example of a strategy. This time I will use the MACD histogram for determining entry and exit points. And if you watch this chart, you see here that there is potential profit to make when MACD has a crossover of MACD signals which are below the zero line, here and here, and when they sell above the zero line. That's over here and that's over here. So let's see if this strategy holds up in backtesting. The MACD pseudocode should look like this. For buying conditions, the MACD should be below zero and the MACD line should cross up the MACD signal line. And for selling conditions, the MACD should be below zero and MACD should cross below the signal line. So let's see how this looks in code. The pseudocode which I've shown you in the last slide should look like this in real Python code. For this indicator, Freqtrade uses the ta-lib Python library for technical indicators, and you can see over here that there is actually one MACD indicator and it is split into multiple data frames. Here you see the two rules of the strategy. The first one says to buy when MACD is below zero and has a cross up of the signal line. And the second rule is the sell rule, which says to sell if MACD is below zero and crosses down the MACD signal line. And of course, in this case, we will backtest with the same config file, but with another strategy file. Now let's see how this looks on my Linux machine. Let's first clear up the results of our last backtest. And again, I have prepared a file, in this case for the MACD strategy, and it's over here. So I'm just basically copying and pasting this into my other Freqtrade directory. And if I open this file, you can see over here, let's start from the top, that in this case the indicator is the MACD, which I've shown you in the slide. And a little bit further down, you can see my two rules. These are the rules for buying. MACD should be below zero and there should be a crossover. And for selling, the MACD should be above zero and the crossing should be below. So you can see that this strategy looks a lot like the SMA RSI strategy, but it uses a different indicator. Now let's save this and close the other files. Let's go ahead and use our last command and use the command, what was it called again, MACD strategy. MACD strategy. Okay, let's see if this strategy performs better than the SMA strategy. And here you can see the results of this strategy. Again, let's take a look at all the pairs. In this case, XRP is our most profitable pair, which gives us 2 wins and 0 losses, which gives us a win rate of 100%. Then Ethereum with 60% win rate, and in total we had a 54% amount win rate, which is considerably better than our SMA RSI strategy. And when we go down, we can see from this that we actually had 20% profit. So it gave us $200 over the last 200 days, and yeah, actually we found a better strategy than our SMA RSI strategy. It's profitable. However, the last thing you should look at is the drawdown. And where is it? Here it says it had a 20% drawdown from the top. And how much drawdown did our last strategy have? Let's see if I can. No. I can do it like this. Take the last strategy and run it again. And you can see that the drawdown over here was 26%. So what we found out by comparing these two strategies is that the MACD strategy is actually performing better than the RSI, the SMA RSI strategy, which is good because that's the whole intention of backtesting and finding the best strategy. After you have found a strategy that you want to test further, then it's time to test this strategy out in current market conditions without putting your money at risk. In this phase, you should forward test your strategy and use the dry run option in your config.json file to start the bot with a fictitious amount of money and let it trade in current market conditions. If you have created the service of the bot, like I've shown you in one of my earlier videos, you can even leave it running for multiple weeks and see how the strategy performs 24/7. You can leave the bot running until you are confident enough that the strategy performs good and will also perform well in the future. The longer you test, of course, the more information you get on the performance of the strategy. Now, if you have enough confidence that the strategy will perform good in the future and you want to put your real money at risk to get some real juicy gains, that's the moment where you set your config.json dry run option to false and restart your bot to do live trading. But of course, keep a close eye on the performance of your bot and your trading strategy, because what I said earlier in this video, a strategy that performed well in the past will not necessarily perform good in the future. And there you have it. It's a complete process on how to think about, develop and test a new strategy for your trading bot. Be aware of all the caveats that I've told you in this video, but don't let them scare you when developing a good strategy. The process in this video may be a little bit rough around the edges, but it should give you enough information to start developing your own strategy. I certainly hope that you will find a profitable strategy, and if you do, please leave your experiences in the comments below. I'm very curious on your progress. And also, if you like the contents of this video and you think it was worth your time, then please click the like button to let me know. Also, please subscribe to my channel and click the notification bell to get updated on new videos. It certainly helps to give me positive feedback because I put a lot of time and effort in these videos to give you valuable content. I hope to see you in the next video. Goodbye.